Let's look at this next question. A company wants to raise capital through a financial intermediary that pools funds from small investors and invests in diversified securities. Which type of financial intermediary is most suitable for this purpose? Here are your options. A. Investment bank. B. Mutual fund. C. Insurance company. Or D. Pension fund. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Mutual funds pool money from many investors to invest in a diversified portfolio, offering professional management and liquidity. Let's look at this next question. A financial intermediary offers both asset management services and credit facilities. Which dual role does it embody in the financial system? Here are your options. A. Mutual fund and commercial bank. B. Broker and depository participant. C. Insurance company and pension fund. Or D. Investment banker and credit rating agency. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Commercial banks provide credit, while some also offer asset management services. Mutual funds manage assets but do not provide credit. Here is another practice question. Under SEBI Prohibition of Fraudulent and Unfair Trade Practices Regulations 2003, which of the following transactions would most likely trigger an investigation? Here are your options. A. Routine bulk trading by institutional investors. B. Wash trades creating artificial volumes. C. Open market purchases by retail investors. Or D. Ordinary market-making activities. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Wash trades are fraudulent as they create artificial volumes to manipulate market perception, prompting SEBI investigation. Test your knowledge with this one. An investor wants to verify the credentials of a foreign portfolio investor, FPI, applicant. Which SEBI regulation category specifies the eligibility and categorization of FPIs? Here are your options. A. SEBI Foreign Portfolio Investors Regulations 2019. B. SEBI Intermediaries Regulations 2008. C. SEBI Mutual Funds Regulations 1996. Or D. SEBI Alternative Investment Funds Regulations 2012. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. The SEBI Foreign Portfolio Investors Regulations 2019 details eligibility and categories of FPIs. Let's tackle this exam question. A mutual fund plans to issue units with no fixed maturity and allows investors to redeem units on demand. What type of scheme is it, and how does it differ from a closed-end scheme in terms of unit trading? Here are your options. A. Open-end scheme. Units can only be traded on stock exchanges, unlike closed-end schemes. B. Closed-end scheme. Units can be redeemed anytime, unlike open-end schemes. C. Closed-end scheme. Units are issued without limit, unlike open-end schemes. Or D. Open-end scheme. Units are created or redeemed on demand, unlike closed-end schemes, where units are traded on secondary markets. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. Open-end funds issue and redeem units based on demand, whereas closed-end funds have fixed units traded on secondary markets. Moving on to the next one. Which financial intermediary primarily executes secondary market transactions on behalf of clients and earns brokerage for the service? Here are your options. A. Stockbroker. B. Mutual fund. C. Merchant banker. Or D. Registrar and share transfer agent. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Stockbrokers carry out buy-sell orders in the secondary market and earn brokerage fees. Moving on to the next one. A company issues warrants as long-term call options linked to its equity shares. If an investor expects a rise in the underlying equity share price, what action regarding the warrant is most beneficial? Here are your options. A. Write, sell the warrant to receive premium income. B. Buy the warrant to gain the right to purchase shares at the exercise price. C. Ignore the warrant and only buy equity shares. Or D. Sell the warrant immediately to realize profit. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Buying warrants allows the investor to purchase shares later at a fixed exercise price, benefiting from price appreciation. Let's tackle this exam question. An investor holds equity shares in a company. Which of the following rights does the investor not typically have? Here are your options. A. Right to receive dividends. B. Right to vote at general meetings. C. Right to preferential repayment on liquidation. Or D. Right to transfer shares. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Equity shareholders have residual claims and are last in line for repayment on liquidation, unlike preference shareholders. Test your knowledge with this one. A borrower expects short-term rates to rise in 3 months and plans to take a 6-month loan then. The borrower buys a 3/6 FRA at 7%. At expiry, the 6-month LIBOR is 8%. What is the cash flow implication? Here are your options. A. The FRA seller pays the borrower the difference between 8% and 7%. B. The borrower pays the FRA seller the difference between 8% and 7%. C. No payment is made as the FRA rate is fixed at 7%. Or D. The borrower pays the bank the full interest at 8%. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. If the reference rate exceeds the FRA rate, the FRA seller compensates the buyer for the excess interest cost. Test your knowledge with this one. If a company expects to invest surplus funds in 3 months but fears falling interest rates, which derivative should it use to lock in a minimum yield? Here are your options. A. Enter a fixed for floating interest rate swap paying floating. B. Buy an interest rate floor. C. Buy an interest rate cap. Or D. Sell interest rate futures. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. An interest rate floor guarantees a minimum interest rate on floating rate investments. Let's tackle this exam question. An intermediary made illegal gains by violating SEBI regulations. Which section empowers SEBI to order disgorgement of such wrongful gains? Here are your options. A. Section 11B. B. Section 11(3). C. Section 11A. Or D. Section 11C. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Section 11B empowers SEBI to direct disgorgement of gains or losses averted due to contraventions. SEBI orders the attachment of bank accounts of a person involved in securities violations. For how long can such attachment be valid under the Act? Here are your options. A. Up to 90 days. B. Indefinitely until trial ends. C. Up to 30 days. Or D. Until SEBI issues a penalty. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Section 11(4) restricts attachment of bank accounts or property to a period not exceeding 90 days. Let's tackle this exam question. The IFSCA aims to facilitate ease of doing business in IFSCs. Which of the following best describes its regulatory approach? Here are your options. A. A unified regulator with a holistic vision. B. A sector-specific regulator focusing only on insurance. C. A subsidiary of the Ministry of Finance. Or D. An advisory body without enforcement powers. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. IFSCA acts as a unified regulator, promoting an integrated and efficient regulatory environment for IFSCs. Let's look at this next question. Which of the following entities is not under the regulatory ambit of PFRDA? Here are your options. A. Employees Provident Fund Organization, EPFO. B. Any pension scheme not regulated by other enactments. C. Pension funds established under PFRDA Act. Or D. National Pension System, NPS. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. EPFO schemes continue under separate acts and are not regulated by PFRDA. Let's tackle this exam question. In a case of suspected insider trading involving manipulation of share prices, which investigative body under the Ministry of Corporate Affairs is best suited to investigate? Here are your options. A. Economic Offences Division, EOD, of CBI. B. Financial Intelligence Unit, India, PFUTP. C. Serious Fraud Investigation Office, SFIO. Or D. Central Board of Direct Taxes, CBDT. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. SFIO specializes in white-collar crimes, including capital market frauds like insider trading. Which of the following is not a function of the Financial Intelligence Unit India, FIUIND? Here are your options. A. Analyzing suspicious financial transactions to detect money laundering. B. Conducting criminal prosecutions for financial crimes. C. Sharing financial intelligence with national and international agencies. Or D. Maintaining a national database on financial transactions. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. FIUIND analyzes and disseminates information but does not conduct prosecutions. Let's tackle this exam question. A company executor is entrusted with distributing assets as per a will, but instead converts the assets to personal use. Under which section of the Bharatiya Nyaya Samhita 2023 is this offence categorized, and what is the key element that differentiates it from theft? Here are your options. A. Section 316. Entrusted dominion over property and dishonest misappropriation. B. Section 314. Finding lost movable property and misappropriation. C. Section 228. Fabrication of false evidence to mislead court. Or D. Section 335. Forgery of documents related to property. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Section 316 deals with criminal breach of trust, where a person entrusted with property dishonestly misappropriates it. Unlike theft, the person initially has lawful possession or dominion over the property. Here is another practice question. Which of the following best describes the legal nature of proceedings before the Securities Appellate Tribunal, SAT? Here are your options. A. Proceedings are criminal trials governed by the Indian Penal Code. B. Proceedings are administrative and non-judicial in nature. C. Every proceeding before SAT is deemed a judicial proceeding and SAT is deemed a civil court. Or D. Proceedings are arbitrations with limited powers. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Section 15(u)(3) states that every proceeding before SAT is a judicial proceeding and SAT is deemed a civil court for purposes of evidence and procedure. Let's look at this next question. A person wants to challenge an order passed by an adjudicating officer under the SEBI Act. Which authority will hear the appeal and under what condition? Here are your options. A. Securities Appellate Tribunal, SAT, appeal filed within 45 days and no prior consent given to order. B. Supreme Court directly, appeal filed within 30 days. C. High Court, only if SAT refuses to hear the appeal. Or D. SEBI Internal Review Board, no time limit. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Appeals against adjudicating officers' orders are heard by SAT within 45 days and only if the aggrieved party did not consent to the order. Test your knowledge with this one. Which of the following acts constitutes dealing in securities as per SEBI Prohibition of Fraudulent and Unfair Trade Practices Regulations 2003? Here are your options. A. Buying, selling, subscribing, or agreeing to transact in any security by any person, including agents or intermediaries. B. Trading done only on stock exchanges. C. Only direct buying and selling by principal investors. Or D. Holding securities without trading. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Dealing in securities includes any act of buying, selling, subscribing, or agreeing to transact in securities by any person, including intermediaries or agents. Let's tackle this exam question. Which of the following acts would be classified as an unfair trade practice under SEBI Prohibition of Fraudulent and Unfair Trade Practices Regulations 2003? Here are your options. A. Mis-selling securities by concealing associated risks knowingly. B. Disclosure of financial results after stock exchange hours. C. Buying securities for long-term investment. Or D. Trading based on publicly available information. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Mis-selling securities by concealing risks or making misleading statements is an unfair trade practice prohibited by SEBI. Under Companies Act 2013, a company wants to appoint an independent director. Which chapter primarily governs the appointment and qualifications of directors? Here are your options. A. Chapter 13. B. Chapter 12. C. Chapter 11. Or D. Chapter 7. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Chapter 11 deals with appointment, qualifications, and other aspects related to directors. Moving on to the next one. A company listed on a recognized stock exchange acquires 3% voting rights, causing a change of 2.5% in shareholding. Which SEBI regulation mandates disclosure of this change? Here are your options. A. Regulation 29(2). B. Regulation 3(1). C. Regulation 4. Or D. Regulation 5(1). Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Regulation 29(2) requires disclosure for transactions causing more than 2% change in shareholding. Let's look at this next question. Which of the following agreements is expressly declared void under contract law? Here are your options. A. Agreement to form a partnership. B. Agreement to pay a debt. C. Agreement to sell goods. Or D. Agreement in restraint of trade. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. Agreements in restraint of trade are expressly declared void as they restrict lawful business. Test your knowledge with this one. A principal is bound to indemnify his agent under which section of the contract law? Here are your options. A. Section 222. B. Section 211. C. Section 213. Or D. Section 212. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Section 222 requires the principal to indemnify the agent for lawful acts done in authority. Test your knowledge with this one. A stockbroker provides brokerage services to a client located in a different state. Under GST provisions, what is the place of supply of stockbroking services for GST purposes? Here are your options. A. Location of the supplier, stockbroker. B. Location of the recipient, client, as per supplier's records. C. Location of the stock exchange. Or D. Location where the transaction is settled. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Place of supply is the location of recipient as per records of supplier. If not available, then supplier location. Test your knowledge with this one. An investor receives dividend income of Rs 4,500 in a financial year from mutual funds. What is the TDS applicable? Here are your options. A. No TDS as dividend income is below Rs 5,000 threshold. B. 20% as PAN not submitted. C. 5%. Or D. 10%. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Dividend income up to Rs 5,000 in a financial year is exempt from TDS. Here is another practice question. An intermediary is preparing the annual compliance certificate to be submitted by the county on the 1st of April. Which of the following disclosures must be certified as true and complete? Here are your options. A. Only financial disclosures made in audited statements. B. All disclosures made in Form A and under relevant SEBI regulations. C. Disclosures related to tax compliance only. Or D. Disclosures pertaining to employee remuneration. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Regulation 12 requires certification that all disclosures in Form A and under applicable regulations are true and complete. Here is another practice question. An intermediary wants to comply with SEBI CAPS SM Regulations 2007 for certifying its associated persons. Which of the following factors is not considered by SEBI's board when deciding whether certification is required for a person? Here are your options. A. Whether the person interacts with investors or issuers. B. Whether the person deals with investor or client funds or assets. C. Whether the person handles office cleaning and maintenance. Or D. Whether the person is responsible for compliance or risk management. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Certification is required for roles impacting investors, assets, compliance, or risk. Office maintenance staff are excluded. Let's look at this next question. A person aged 55 with 11 years experience wants to obtain a NISM certificate for the first time. What are the permissible ways to obtain the certificate as per regulations?
Here are your options. A. By experience alone without examination or CPE. B. Only by completing a related CPE program. C. Only by passing the relevant certification examination. Or D. Either by passing examination or completing a related CPE program.
Take a moment to pause the video and decide. The correct answer is option D. Let's see why. Persons over 50 or with 10 plus years experience may obtain certification by either passing exam or completing CPE program. Let's tackle this exam question. A principal chooses to revalidate their certificate by delivering sessions. How many sessions must they deliver in a specific CPE program as per NISM guidelines? Here are your options. A. At least 2 sessions. B. At least 3 sessions. C. At least 4 sessions. Or D. At least 5 sessions. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. A principal must deliver at least 4 sessions in specific CPE programs for revalidation. Test your knowledge with this one. If an insider trades on unpublished price-sensitive information and makes a profit of 5 crore, what is the minimum penalty and the maximum penalty under Section 15G? Here are your options. A. Minimum 10 lakh, maximum 25 crore or 3 times the profit. B. Minimum 10 crore, maximum 25 crore or 3 times the profit. C. Minimum 25 crore, maximum 50 crore. Or D. Minimum 1 crore, maximum 5 crore. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Section 15G imposes a minimum penalty of 10 lakh and a maximum of 25 crore or 3 times the profit made, whichever is higher. Let's tackle this exam question. Which of the following powers does the Securities Appellate Tribunal, SAT, not have under Section 15U while hearing appeals? Here are your options. A. Summoning and enforcing attendance of witnesses. B. Reviewing its own decisions. C. Passing criminal sentences. Or D. Receiving evidence on affidavits. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. SAT has powers like a civil court, but cannot pass criminal sentences. Test your knowledge with this one. During an SEBI investigation, a stockbroker refuses to provide certain documents related to stock exchange dealings. Under SCRA provisions, what is the legal consequence? Here are your options. A. SEBI may impose a penalty but cannot compel disclosure. B. The stockbroker may be punished with imprisonment up to 10 years or fine up to 25 crore or both. C. SEBI can only suspend the broker's registration temporarily. Or D. The refusal is protected under client confidentiality laws. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Section 23 states that failure to comply with requisitions without reasonable excuse can lead to imprisonment and/or heavy fines. Let's tackle this exam question. Which of the following best describes the scope of Section 12A(d) of the SEBI Act? Here are your options. A. Prohibits insider trading. B. Mandates registration of intermediaries. C. Allows acquisition of control beyond limits. Or D. Prohibits use of manipulative devices in securities trading. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Section 12A(d) explicitly prohibits insider trading in connection with securities trading. Test your knowledge with this one. An aggrieved party receives an order from the adjudicating officer under SCRA and wants to appeal. What is the time limit to file an appeal before the Securities Appellate Tribunal, SAT? Here are your options. A. 30 days from receipt of order. B. 60 days from receipt of order. C. 45 days from receipt of order. Or D. 90 days from receipt of order. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Section 23L states that an appeal to SAT must be filed within 45 days from the date the order is received. Let's look at this next question. If a stockbroker fails to segregate client monies and uses them for obligations of other clients, what regulatory circular was violated in the Vedika Securities case? Here are your options. A. SEBI Circular Number SMD/SEBI/CIR/93/23321, dated November 18, 1993. B. SEBI Listing Obligations and Disclosure Requirements 2015. C. SEBI Insider Trading Regulations 2015. Or D. SEBI Mutual Fund Regulations 1996. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Vedika Securities violated SEBI Circular Number SMD/SEBI/CIR/93/23321, which deals with segregation of client funds. Let's look at this next question. A designated authority is appointed to inquire into alleged violation by an intermediary. The officer who conducted the initial inspection is proposed to be appointed as the designated authority. Is this permissible? Here are your options. A. Yes, if approved by the executive director. B. No, only officers below division chief can be designated authority. C. Yes, to ensure continuity. Or D. No, an officer involved in inspection cannot be appointed as designated authority. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. No officer who conducted investigation or inspection can be appointed as designated authority to maintain impartiality. Let's tackle this exam question. Which of the following best describes the role of the compliance officer appointed by an intermediary? Here are your options. A. Monitor compliance with securities laws and report material non-compliance. B. Handle client grievances exclusively. C. Manage the financial accounts of the intermediary. Or D. Act as a legal advisor for the intermediary. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Compliance officer is responsible for monitoring compliance and reporting material non-compliance to the board and SEBI. Test your knowledge with this one. SEBI issues a notice to a clearing member for alleged violation. The member does not submit any written response within the stipulated 21 days and no extension is granted. What is the timeline for SEBI to pass an order after expiry of the submission period? Here are your options. A. Only after granting a personal hearing to the member. B. Immediately after expiry of the 21 days without any further delay. C. Within 21 calendar days from the expiry of the time period for filing submissions. Or D. Within 7 business days after expiry of submission period. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. SEBI must endeavor to pass the order within 21 calendar days from the date of expiry of the time period granted for submissions or receipt of submissions. Let's tackle this exam question. After cancellation of the certificate, an intermediary wishes to continue some activities related to the securities market. What does SEBI Regulations state about this? Here are your options. A. The intermediary must cease all activities related to the cancelled certificate immediately. B. The intermediary can continue activities if approved by clients individually. C. The intermediary can carry on activities until the appeal process is exhausted. Or D. The intermediary can continue non-core activities but not core activities. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. On cancellation, the intermediary must cease all activities for which the certificate was granted immediately. Moving on to the next one. An intermediary is found to have created a false market for a newly listed security. Which of the following best describes the violation? Here are your options. A. Routine trading operations. B. Acceptable market-making activity. C. Manipulative transactions prohibited under corporate governance. Or D. Legitimate price stabilization. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Creating a false market is a manipulative transaction banned under SEBI's corporate governance and compliance norms. Moving on to the next one. If a person exercising control over an intermediary is disqualified under fit and proper criteria, what must the intermediary ensure within 6 months? Here are your options. A. The person must divest holdings and cease exercising voting rights. B. The person may continue exercising voting rights indefinitely. C. Immediate removal without notice is mandatory. Or D. No action is required if the person is a promoter. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Disqualified persons exercising control must divest holdings and stop voting rights within 6 months or face regulatory action. A market infrastructure institution, MII, maintains quarterly offline encrypted backups and conducts business continuity drills. Which combination of these measures primarily ensures confidentiality, integrity, and availability of data during a ransomware attack? Here are your options. A.
offline encrypted backups and regular vulnerability scanning. B. Business continuity drills and multi-factor authentication, MFA. C. Offline encrypted backups and business continuity drills. Or D. User awareness training and retaining spare hardware in isolated environment.
Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Offline encrypted backups ensure data confidentiality and integrity, while business continuity drills test readiness and availability during ransomware attacks. Let's tackle this exam question. In the context of SEBI regulations, which of the following best explains the significance of conducting business continuity drills by MIIs? Here are your options. A. To test the organization's readiness against cyber threats, including ransomware. B. To comply with AI and ML reporting timelines. C. To validate client KYC documentation. Or D. To enhance marketing strategies for new clients. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Business continuity drills help MIIs assess preparedness and effectiveness of controls to handle cyber attacks such as ransomware. Let's tackle this exam question. Why does SEBI require MIIs to implement cybersecurity user awareness and training programs? Here are your options. A. To comply with AI and ML reporting requirements. B. To improve client onboarding processes. C. To reduce cost of IT infrastructure. Or D. To enable identification and reporting of suspicious activities by users. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. User awareness training helps detect and report cyber threats, strengthening overall security posture. Test your knowledge with this one. What is the minimum period for which a structured digital database containing details of UPSI sharing must be preserved under Regulation 3(6)? Here are your options. A. 5 years after the transaction completion. B. 8 years after the transaction completion. C. Until the information becomes public. Or D. Indefinitely without any time limit. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. The database must be preserved for at least 8 years after transaction completion. Here is another practice question. A company's board receives UPSI about the initiation of a corporate insolvency resolution process. The board decides to share this information with a consortium of lenders. According to SEBI regulations, what condition must be met before this sharing? Here are your options. A. The information must be shared with all market participants simultaneously. B. The lenders should be insiders by default. No agreements needed. C. The lenders must enter confidentiality and non-disclosure agreements. Or D. The information must first be made public before sharing. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Confidentiality agreements are mandatory for sharing UPSI with third parties. An insider submits a trading plan with a buy trade price limit equal to the closing price on the day before submission and a trade window of 3 consecutive days. The compliance officer finds no overlap or UPSI. What is the maximum permissible price for executing the trade? Here are your options. A. Exactly the previous day's closing price. B. Up to 20% higher than the previous day's closing price. C. Any price below 20% above previous day's closing price. Or D. Exactly 20% higher than the previous day's closing price. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. The upper price limit for a buy trade can be between the closing price on the previous day and up to 20% higher. Let's look at this next question. Which of the following best defines the role of the compliance officer in relation to trading plans under these regulations? Here are your options. A. Approve/reject trading plans, monitor implementation, notify stock exchanges. B. Authorize all trades irrespective of plan. C. Set price limits for trades on behalf of insiders. Or D. Execute trades on behalf of insiders. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. The compliance officer reviews, approves/rejects trading plans, monitors their implementation, and notifies stock exchanges. What is the role of the Chief Investor Relations Officer as per Schedule A in managing unpublished price-sensitive information? Here are your options. A. To audit the trading activities of intermediaries quarterly. B. To be the designated senior officer responsible for disseminating UPSI and ensuring fair disclosure. C. To maintain lists of employees with access to UPSI only. Or D. To approve all trades of designated persons during closed windows. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. The Chief Investor Relations Officer is responsible for handling dissemination of UPSI and ensuring compliance with fair disclosure practices. Test your knowledge with this one. If a designated person fails to execute a pre-cleared trade within 7 trading days, what is the compliance requirement as per Schedule B8? Here are your options. A. They must obtain fresh pre-clearance before executing the trade. B. They can execute the trade without clearance if the market conditions are stable. C. They must notify the compliance officer, but no fresh clearance is needed. Or D. The trade is automatically cancelled and cannot be executed. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Trades not executed within 7 trading days after pre-clearance require a fresh approval to ensure current compliance. Moving on to the next one. Under SEBI PIT regulations, what is the minimum frequency with which the compliance officer must report to the board or audit committee? Here are your options. A. Once every 6 months. B. At least once a year. C. Once every quarter. Or D. Only when a violation occurs. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. The compliance officer is required to report at least once annually to the board or audit committee. Here is another practice question. Who typically specifies the list of designated persons to be covered under the Code of Conduct as per SEBI PIT regulations? Here are your options. A. The compliance officer alone without consultation. B. Any senior employee based on convenience. C. Board of Directors or analogous authority in consultation with compliance officer. Or D. The stock exchange where securities are listed. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The board or analogous authority, in consultation with the compliance officer, specifies designated persons based on role, function, and access to UPSI. Here is another practice question. Which evidence was missing for Umashankar S., Prakash Lohia, and Rajalakshmi Srivaguntam to be held liable for insider trading? Here are your options. A. Constant telephone or email connections with Palam Shrikant Reddy. B. Trading during UPSI periods. C. Holding director positions. Or D. Disclosing UPSI publicly. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. No evidence of constant communication or fund movement with Palem was found. What was the rationale for restraining certain individuals from associating with any listed company for 3 years? Here are your options. A. Due to resignation from previous posts. B. To punish for minor non-compliances. C. Voluntary retirement. Or D. To prevent misuse of inside information and maintain market integrity. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. The restraint serves as a deterrent against insider trading and protects market fairness. Here is another practice question. In the investigation of PEL's sale of its domestic healthcare business, why was Sri Anand Piramal considered legitimately privy to the proposed transaction information despite not being a board member? Here are your options. A. He was a promoter holding about 2% equity and deemed connected under PIT regulations, requiring a need-to-know basis disclosure. B. He was an executive director responsible for operational decisions related to the sale. C. He was a consultant hired specifically to manage the transaction. Or D. He held a formal position on the board of directors as an independent member. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Sri Anand Piramal was a promoter holding 2% equity and classified as a deemed connected person under PIT regulations, thus entitled to information on a need-to-know basis. Here is another practice question. Which regulatory provision requires that a trading window remains closed for 24 hours after disclosure of UPSI to stock exchanges? Here are your options. A. Clause 3.2.3f of the Model Code under PIT Regulations 1992. B. Clause 10 of Schedule B under SEBI PIT Regulations 1992. C. Section 12 of the SEBI Act 1992. Or D. Regulation 9(1) of SEBI PIT Regulations 2015. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Clause 3.2.3f mandates the trading window closure for 24 hours post-UPSI disclosure. Moving on to the next one. What legal principle did the tribunal apply in giving benefit of doubt to PEL regarding the imposition of penalty? Here are your options. A. Benefit of doubt is not applicable in regulatory cases involving securities laws violations. B. Penalties must be imposed strictly regardless of evidence to maintain market discipline. C. In absence of direct evidence of misuse of UPSI or insider trading, penal action should not be mechanical but consider all factors. Or D. Penalties can be waived only if the company pays a settlement amount. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The tribunal emphasized fairness and the need to consider all circumstances before imposing penalties. Here is another practice question. Consider a scenario where a promoter indulges in contra trades within 6 months and the compliance officer does not report this violation to SEBI. What is the crucial responsibility breached by the compliance officer? Here are your options. A. Failure to safeguard investor interests by non-reporting of violations. B. Failure to maintain company's books of account. C. Failure to submit quarterly tax filings. Or D. Failure to conduct annual general meeting. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Compliance officers must report insider trading violations to protect investor interests. Non-reporting is a serious breach. Let's tackle this exam question. A designated person executed trades during the closed window period and earned Rs 14,063.75 profit, but did not remit it to IEPF. What should be the compliance officer's immediate step after discovering this? Here are your options. A. Ignore as profit is less than 20,000 rupees. B. Recommend internal disciplinary action without SEBI reporting. C. Ensure immediate remittance of profit to IEPF and report violation to SEBI. Or D. Advise the person to declare the profit in income tax returns only. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. All profits from trading during prohibited periods must be remitted to IEPF and violations reported to SEBI. During the FFSL investigation, The price of the scrip rose by 4,824.3% with very low volume before a high volume sell-off. What does this pattern most likely indicate? Here are your options. A. Genuine market demand due to improved company profits. B. Price manipulation by connected persons during lock-in period. C. Normal price discovery in a thinly traded stock. Or D. Impact of macroeconomic factors on stock price. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. A steep price rise with low volume followed by high volume sell-off, especially by connected persons, indicates price manipulation. Here is another practice question. If SEBI restrains a person from accessing the securities market, what does this specifically prohibit? Here are your options. A. Only buying securities but not selling them. B. Obtaining loans against securities. C. Participating in company board meetings only. Or D. Engaging in any buying, selling, or dealing in securities directly or indirectly. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. Restraint from market access prohibits all forms of dealing in securities, whether direct or indirect. Test your knowledge with this one. Pooja Menghan's trading showed a pattern where her sell orders matched buy orders of others with prices near the highest market price on the day. What does this indicate about her trading behavior?
Here are your options. A. She engaged in front-running by using confidential information to anticipate trades and profit. B. She was providing liquidity to the market without any unfair advantage. C. She was attempting to manipulate prices by placing random orders. Or D. She was hedging her own existing positions with unrelated trades.
Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Matching sell orders with others' buy orders at prices near daily highs indicates front-running, exploiting confidential information to gain unfair profits. Here is another practice question. Which of the following best explains the concept of circular trading as applied in the Vishwas Group case? Here are your options. A. Trading by unrelated parties executing independent trades at the same time. B. Trading involving foreign investors only. C. Trading where the same securities are bought and sold repeatedly among colluding entities to create artificial volume. Or D. Trading restricted to derivatives market. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Circular trading involves collusive entities repeatedly buying and selling to simulate activity and manipulate prices or volumes. In the Hemant Ghai case, what aspect of the trading pattern indicated misuse of unpublished price-sensitive information? Here are your options. A. BTST trades were executed several weeks after recommendations aired on CNBC Awaaz. B. Stocks were purchased the day before by recommendations and sold immediately on recommendation day. C. Trades occurred only on days when no recommendations were made. Or D. Trades were executed randomly with no correlation to show recommendations. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. The BTST trades synchronized to the timetable of buy recommendations show advanced knowledge and misuse of unpublished information. Here is another practice question. What preventive action did SEBI take against Hemant Ghai and related entities pending detailed examination? Here are your options. A. Allowed normal trading with enhanced disclosures. B. Permanent ban on all market activities without appeal. C. Restraint from buying, selling, or dealing in securities directly or indirectly till further directions. Or D. Only a warning letter was issued. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. SEBI issued ad interim restraining orders to preserve market integrity pending detailed inquiry. If a business relationship between a client and a reporting entity ends on the 1st of January 2020, but the last transaction was on the 1st of January 2022, for how long must the records be maintained? Here are your options. A. 5 years from the 1st of January 2022, last transaction date. B. 5 years from the 1st of January 2020, end of relationship. C. Indefinitely as the relationship ended. Or D. Only until the 1st of January 2025, whichever is earlier. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Records must be maintained for 5 years from the later of the two dates, either the end of business relationship or the date of the last transaction. Here is another practice question. A reporting entity maintains records of a specified transaction. For how long must these records be preserved under enhanced due diligence provisions? Here are your options. A. 10 years from the date of transaction. B. 2 years from the date of transaction. C. Only until the business relationship ends. Or D. 5 years from the date of the transaction. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. Enhanced due diligence information must be retained for 5 years from the date of the transaction as per Section 12AA4. Here is another practice question. An intermediary identifies a client as a politically exposed person, PEP, during onboarding. What enhanced due diligence steps should be taken?
Here are your options. A. Obtain senior management approval, conduct enhanced monitoring, and gather additional information on source of funds. B. Proceed with normal due diligence, but flag the account internally for review at year-end. C. Reject the client immediately to avoid any regulatory risk. Or D. Only verify the identity documents. No additional steps are required.
Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. PEPs pose higher risks. Enhanced due diligence, including senior management approval and ongoing monitoring, is mandatory to mitigate ML/TF risks. Moving on to the next one. If an intermediary identifies a client located in a high-risk country, what is the expected approach under AML standards? Here are your options. A. Classify the client as high risk and apply enhanced due diligence and continuous monitoring. B. Open account but restrict transactions above a threshold only. C. Proceed with standard due diligence if client documents are valid. Or D. Reject the client without any further assessment. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Clients from high-risk jurisdictions require heightened scrutiny to mitigate increased ML/TF risks. Here is another practice question. During the CDD process, a client provides identification documents from unreliable sources. What should the intermediary do next? Here are your options. A. Reject the documents, request reliable and independent documents, and withhold account opening until verification is complete. B. Accept documents if the client is known to the intermediary personally. C. Request a notarized copy of the same documents without further verification. Or D. Proceed with account opening and monitor transactions closely thereafter. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Verification must use reliable, independent sources. Unreliable documents must be rejected to prevent fraud. A registered intermediary discovers that a long-standing client has recently become a politically exposed person, PEP. What is the immediate compliance action the intermediary must take? Here are your options. A. Close the client's account immediately without further transactions. B. Obtain senior management approval to continue the business relationship. C. Ignore the change if the client has a low transaction volume. Or D. Report the client to FIU IND without any internal approval. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. When a client or beneficial owner becomes a PEP, the intermediary must obtain senior management approval to continue the business relationship before proceeding. Let's look at this next question. A client from a country with weak anti-money laundering controls is designated as a CSC, client of special category. What enhanced measures should the intermediary apply? Here are your options. A. Enhanced scrutiny, including systematic reporting and transaction monitoring. B. Refuse to onboard the client outright without review. C. Standard due diligence with no additional scrutiny. Or D. Only monitor transactions above a high threshold. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Clients from high-risk countries require enhanced due diligence, including enhanced scrutiny and systematic reporting of financial transactions. Let's look at this next question. Which of the following clients would require the highest level of due diligence under the PMLA and SEBI guidelines? Here are your options. A. A domestic client with no political exposure and regular small transactions. B. A newly onboarded client identified as a politically exposed person, PEP. C. A client investing only in government securities with verified identity. Or D. A client with a long-standing relationship and consistent transaction patterns. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. PEPs require enhanced due diligence due to the higher risk associated with their political exposure. Let's tackle this exam question. SHF delayed updating its AML policy by 8 months after SEBI's March 12, 2014 circular. What was SEBI's stance on the delay? Here are your options. A. Delay was a violation as immediate compliance was mandatory. B. Delay was acceptable as no fixed timeline was prescribed. C. Delay was excused due to operational challenges. Or D. Delay was irrelevant as no suspicious transactions were reported. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. SEBI held that immediate compliance to circular provisions is mandatory, despite no fixed timeline. Let's look at this next question. Shripati Holdings and Finance Private Limited, SHF, delayed rectifying deficiencies observed in an inspection related to AML and CFT by more than 2 years. Which of the following implications best explains the risk posed by such delayed compliance? Here are your options. A. It allows SHF to operate without reporting suspicious transactions legally. B. It increases the chance of ongoing money laundering due to prolonged non-compliance. C. It shifts responsibility to SEBI for failure to enforce regulations timely. Or D. It reduces the regulatory penalty as delay shows intent to comply eventually. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Delayed rectification means SHF remained non-compliant for over 2 years, increasing risk of undetected money laundering activities. Let's look at this next question. Which of the following categories is eligible to apply for registration as a KYC registration agency, KRA, under SEBI KRA Regulations 2011? Here are your options. A. A wholly owned subsidiary of a self-regulatory organization, SRO, registered under SEBI SRO Regulations 2004. B. Any private company with net worth of Rs 10 crores. C. An unregistered intermediary offering KYC services. Or D. A foreign financial institution without Indian operations. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Only wholly owned subsidiaries of recognized stock exchanges, depositories, or SROs registered under SEBI are eligible. Let's tackle this exam question. If a client updates their KYC details after initial registration, what is the KRA's obligation regarding dissemination of this updated information? Here are your options. A. Send updated info only to the original intermediary. B. Disseminate updated info to all intermediaries availing KRA services for that client. C. Update KYC records but not share with intermediaries unless requested. Or D. Update KYC records and share only with SEBI. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. KRAs must disseminate any updated client information to all intermediaries using their services for that client. Which of the following best explains the audit trail requirement maintained by a KRA? Here are your options. A. Maintaining logs of any upload, modification, or download related to client KYC records. B. Audit trail applies only to physical documents. C. Maintaining records only of initial KYC uploads. Or D. Audit trail is maintained at the intermediary level only. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. KRAs must maintain comprehensive audit trails capturing all activities related to client KYC records. Here is another practice question. If an intermediary uploads a client's KYC data to the KRA system and later finds that the data is duplicated, what is the correct course of action as per SEBI regulations? Here are your options. A. Delete the older record and keep the new one. B. Notify the KRA to merge or remove duplicates. C. Ignore duplication as KRA will handle it. Or D. Immediately re-upload the correct data without notification. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Intermediaries must ensure no duplication while uploading, and KRAs coordinate to prevent duplication. Hence, notifying KRA for duplication resolution is correct. Let's tackle this exam question. In the case of MS Tradebull Securities Private Limited, which was found in violation for delayed uploading of KYC documents, what was the monetary penalty imposed under Section 15HB of the SEBI Act? Here are your options. A. Rupees 1 lakh. B. Rupees 5 lakh. C. Rupees 10 lakh. Or D. Rupees 1 crore. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The adjudicating officer imposed a penalty of rupees 10 lakh under Section 15HB. A foreign portfolio investor, FPI, applicant has 30% contribution from a single non-resident Indian, NRI. Under SEBI FPI Regulations 2019, what is the implication? Here are your options. A. Applicant is ineligible as NRI contribution exceeds 25%. B. Applicant is eligible without restrictions. C. Applicant must reduce NRI contribution to below 50%. Or D. Applicant is eligible only if investing in government securities. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Contribution from a single NRI must be below 25% of the corpus for FPI eligibility. Moving on to the next one. Which of the following is a key criterion for SEBI to consider an FPI applicant as fit and proper? Here are your options. A. Having at least 5 years of trading experience in India. B. Being a resident Indian individual. C. Having a minimum net worth of rupees 10 crore. Or D. Meeting criteria specified in Schedule 2 of SEBI Intermediaries Regulations 2008. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. The fit and proper status is assessed based on criteria in Schedule 2 of SEBI Intermediaries Regulations. Here is another practice question. Which of the following transactions by an FPI is not required to be routed through a stockbroker registered with SEBI? Here are your options. A. Secondary market purchase of equity shares listed on recognized stock exchange. B. Sale of securities in response to a letter of offer under SEBI Takeover Regulations 2011. C. Short selling on a recognized stock exchange as per SEBI framework. Or D. Market making transactions on recognized stock exchanges. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Sales in response to a letter of offer under SEBI Takeover Regulations are exempted from the requirement of routing through SEBI-registered stockbrokers. Test your knowledge with this one. An FPI wishes to invest in debt securities offered by an Indian company. Apart from SEBI regulations, which other body's terms must the FPI comply with? Here are your options. A. Reserve Bank of India directives. B. Stock exchange norms only. C. No other compliance apart from SEBI. Or D. Ministry of Finance only. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. FPIs investing in debt securities must comply with SEBI and Reserve Bank of India specified terms and conditions. Test your knowledge with this one. An ODI issuing FPI hedges its ODI only by investing in securities held in India, excluding derivatives. Under SEBI regulations, can this FPI undertake proprietary derivative positions through the same FPI registration? Here are your options. A. Yes. Proprietary derivative positions are allowed under the same FPI registration. B. No. Proprietary derivative positions must be undertaken using a separate FPI registration. C. Yes, but only if the proprietary derivative positions are hedged onshore. Or D. No. Proprietary derivative positions are prohibited for all ODIs. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. An ODI issuing FPI that hedges its ODI only by investing in securities held by it in India cannot undertake proprietary derivative positions through the same FPI registration. Separate registrations are required. Moving on to the next one. Which regulatory clause was violated due to the DDP's failure to report the FPI's change of domicile within 6 months in the HSBC case? Here are your options. A. Section 12(1)(a) of the SEBI Act. B. Regulation 3(1) of FPI Regulations. C. Clause 5.1.4 of Operational Guidelines of DDPs. Or D. Clause 3 of the Code of Conduct for Custodian of Securities. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The DDP violated Clause 5.1.4 of the Operational Guidelines of DDPs by failing to promptly report the change. Moving on to the next one. A non-resident investor transfers existing shares in an unlisted Indian company to a resident. According to FEMA, what is the minimum price at which the shares can be transferred? Here are your options. A. Negotiated price with no restrictions. B. Price not less than fair value determined by internationally accepted methodology certified by a chartered accountant or SEBI merchant banker. C. Price based on the last transaction price of the company shares in the stock exchange. Or D. Price fixed by the Reserve Bank of India. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. For unlisted companies, FEMA requires that the price should not be less than the fair value worked out using internationally accepted valuation methods certified by a CA or SEBI merchant banker. Test your knowledge with this one. Under FEMA, which of the following instruments can an Indian company issue to foreign investors under the FDI scheme? Here are your options. A. Only equity shares and warrants. B. Equity shares, optionally convertible debentures, and non-convertible preference shares. C. Equity shares and non-convertible debentures only. Or D. Equity shares, fully and mandatorily convertible debentures, fully and mandatorily convertible preference shares, and warrants. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. FEMA permits issue of equity shares, fully and mandatorily convertible debentures, fully and mandatorily convertible preference shares, and warrants to foreign investors under the FDI scheme. Test your knowledge with this one. A non-resident Indian, NRI, intends to acquire shares on the stock exchange of an Indian company where they already hold controlling interest. Which conditions must be satisfied under the FDI scheme? Here are your options. A. NRI can acquire shares without any restrictions. B. NRI must ensure original and resultant investments comply with FDI policy and FEMA regulations. C. Acquisition allowed only if sectoral cap is breached. Or D. Such acquisitions require prior approval from SEBI only. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Acquisition under FDI scheme on stock exchange requires adherence to sectoral caps, entry routes, and FEMA regulations, especially if the investor holds control. Test your knowledge with this one. Which entities are eligible to receive debt funds from persons resident outside India under Foreign Exchange Management Debt Instruments Regulation 2019? Here are your options. A. Only mutual funds and banks. B. Indian companies, LLPs, asset reconstruction companies, mutual funds and venture capital funds. C. Only Indian companies. Or D. Only government entities. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Debt funds can be received by Indian companies, LLPs, asset reconstruction companies, mutual funds, and venture capital funds. Let's tackle this exam question. If a depository is found guilty of violating the conditions laid down under the Depositories Act 1996, which authority is empowered to impose penalties and take corrective action? Here are your options. A. Securities and Exchange Board of India, SEBI. B. International Finance Services Centres Authority, IFSCA. C. Registrar of Companies, ROC. Or D. Ministry of Corporate Affairs, MCA. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. SEBI is the regulatory authority empowered under the Depositories Act 1996 to impose penalties and enforce compliance related to depositories, except in IFSCs where IFSCA has jurisdiction. Test your knowledge with this one. Which of the following best describes the role of a depository under the Depositories Act 1996? Here are your options. A. Custodian of physical share certificates. B. Facilitator of electronic maintenance and transfer of securities. C. Issuer of shares to investors. Or D. Registrar maintaining company records. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. A depository holds securities in electronic form and facilitates electronic transfers, not physical custody or issuance. A beneficial owner who opts to hold securities with a depository receives new security certificates within how many days after opting out and informing the depository? Here are your options. A. 45 days. B. 30 days. C. 60 days. Or D. 15 days. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. The issuer must issue new certificates within 30 days of receiving information from the depository about the beneficial owner's opt-out. Let's look at this next question. Who can file an appeal against an order of SEBI under the Depositories Act to the Securities Appellate Tribunal, SAT? Here are your options. A. Only the issuer. B. Only the depository participant. C. Any person aggrieved by SEBI or adjudicating officer's order. Or D. Only the central government. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Any aggrieved person by SEBI or AO's order can appeal to the SAT. Let's tackle this exam question. If an AMC wants to launch a new mutual fund scheme, what is the mandatory step before the launch as per SEBI regulations? Here are your options. A. Approval from the sponsor only. B. Approval from the trustees only. C. Approval from both sponsor and trustees. Or D. Approval from the registrar and transfer agent, RTA. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. All new schemes require prior approval of the trustees before their launch to ensure investor protection and compliance. Let's tackle this exam question. Which document governs the operations of a mutual fund trust and is executed between the sponsors and trustees? Here are your options. A. Investment Management Agreement. B. Trust Deed. C. Offer Document. Or D. Registrar Agreement. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. The trust deed is the governing document between sponsors and trustees outlining mutual fund operations. A mutual fund's asset management company, AMC, board consists of 9 directors. According to SEBI regulations, what is the minimum number of independent directors required on the AMC board? Here are your options. A. 3, B. 5, C. 6, or D. 4. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. SEBI mandates a minimum of 2/3 independent directors on the AMC board, so for 9 directors, at least 6 must be independent. An AMC director is appointed on 2 different AMC boards. What is the regulatory status of this appointment? Here are your options. A. Allowed if director is independent. B. Not allowed. A director cannot be on 2 AMC boards. C. Allowed with SEBI approval. Or D. Allowed if the AMCs are subsidiaries. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. A director of an asset management company cannot be on the board of another AMC.